I would say that the risk return profiles of REITs as an investment unit is in a very sweet spot. Because if you think about the dividends that get paid out, so there's a cash flow stream for investors, there is the underlying growth, a combination of both of these giving higher yields as compared to classic debt products, and therefore making them attractive while maintaining very low risks is something that just hit the hybrid plus gap in the market that did exist earlier. The second is linked to the risk profile is actually the support from SEBI, which is in terms of both just regulations and governance, making this asset even more risk-free in the eyes of the investor, whether it is retail or institutional, because once it's kind of a REIT has gone through the rigorous SEBI process, there is a lot of self-assurance at the background in terms of diligence that gets carried out, but also in terms of how regulations have over time evolved. For example, when it was initially envisaged and launched, there was a minimum threshold of about 2 lakh rupees as an investment unit, which now is literally to 1 unit for the retail investor. Similar kind of tax changes. So I think the second theme is just SEBI's involvement and working very collaboratively in making this highly successful. The last one I would call out is actually where India is today and foreseen for the next 10 years of growth. Massive, I mean, we are huge as Brookfield, we are huge believers in the India story in terms of the domestic growth, as well as in terms of how India is now uniquely positioned on the global map. We have investments flowing in from all across, the demographic dividend paying out. We've now seen in data that India is the fastest large-scale economy growing across the world. So I think we just have a huge runway of positive infrastructure build out lying ahead.